Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. This is the Morning Forex Report. Today's date is January 10th, 2023. In this report, I take a look at the technicals that are driving the markets to kickstart the day in the North American session. So let's get started. Before deep diving into some of the currency pairs, let's talk a little bit about what's going to happen today. And Fed's Chair Powell is going to speak at 9 a.m. He's on a panel discussion. That panel discussion is going to be talking about central bank independence. So it's hard to say whether he's going to get into the nitty-gritty of the monetary policy or the economy, but we will see. What we do know is that Fed's Daly and Fed's Bostic spoke yesterday, and they reiterated the storyline of the Fed that the rates are going to move up to 5.25%, somewhere around there. And then they may look at the data and decide whether to stop raising rates or whatever. What we did learn from yesterday is that Mary Daly, the San Francisco Fed president, is very focused on the service sector CPI ex housing. So I know we all look at that measure of CPI when we each month, and it comes out not. But what the market will be looking at on Thursday, because it was specifically mentioned a number of times by Fed President Daly yesterday about how it's her now favorite measure of inflation going forward. So another hoop to jump through for the Fed as they continue their book storyline here for the transition that may or may not occur in the Fed policy and in the market. So with that said, let's take a look at the euro versus US dollar from a technical perspective, because the price doesn't lie. Price tells us what the buyers and sellers are deciding. And what we see in the euro versus US dollar is that the sellers started to come in a little bit yesterday when the market hit this yellow zone. This yellow zone represents swing areas going back in time. We had some swing low right here, and then another swing lows through here, where the market formed this flourish type area, trying to move higher, couldn't, moved up to this high right here and backed off, not once, not twice, but three different times in the market. Rotated to the downside when we came back up to this area right through here, this yellow area. What do? We found sellers before the market started a rotation to the downside. So that's this area right here was a key target that we were looking for to get to, and I think it's going to be a key target going into at least the first, maybe not at least, but the first quarter of 2023, a barometer for whether we go higher or we go lower. And that may also be dependent upon the CPI and that ex-service sector CPI ex-housing data that comes out on Thursday, whether or not we move higher or we move lower here in the euro versus US dollar or the dollar more specifically. Right now we are seeing some sellers. We're seeing some sellers against the 61.8 or near the 61.8 at 107.468 today, but the range is very narrow, as you can see, much narrower than what we saw over the last 2 days, where the market bounced higher after the jobs report and the follow-through buying yesterday. So we are in sort of a consolidation, sort of corrective, maybe sellers against resistance type of mood here ahead of the CPI. We will see how it all plays out. Taking a look at the hourly chart, we do have the market has come down to this high right here, this old high from end of December, where the market stalled near 107.127, and that's sort of where the price came down here today. And we are trying to hold support against that level as we speak, currently trading at 107.14. So banging against that door. If we move below that level, then we'll look toward probably this high right here, and maybe this high back here near the 106. Let's call it 107 level. Get below 107 level, and we start to look toward the 38.2% retracement in this swing area down here as the next target for the euro versus US dollar. I wouldn't be surprised if we head on down toward that area, maybe even toward the 100 and 200 hour moving average ahead of the CPI data. We will see, but we first need to get below the 107.12 level, and then near the 107 level for the euro versus US dollar to kickstart that paired to the downside. Let's take a look at the dollar versus yen, and we'll start by taking a look at the daily chart. And recall in the early part of December, the market fell below this low through here, where we had different a swing low right here that started the next move to the upside, and we came down, found support against that level again. In early December, we fell below those levels, but could not close below those levels. Started its rotation back to the upside. We moved above this area right through here, which was a target. I had a line going across there that should have stalled the pair. It moved just a little bit above that and then rotated to the downside on Friday's trading yesterday. We sort of moved a little bit lower into this swing area where we have a number of different swing levels through here. This is a reverse of the euro where we had a ceiling here and then we started to develop a floor. Fell below that level, came down to the 100-hour moving average, which is also this low through here, and then reestablished support before moving to the upside. Very similar pattern, but the opposite to the euro versus US dollar hourly daily chart, but you get the point. So we move down to that area, and we're going to need to get below the 130-124 level to increase the bearish bias, and then we'll look toward the 130.38 if that's the way it's going to go. On the top side, watch 50% retracement on 132.70 to give us some clues whether if we get above that level. Yesterday we couldn't get above that level, and the market rotated back to the downside, so we need to get above the 132.70 level in order to kickstart the upside for the dollar versus yen. Let's take a look at the sterling versus US dollar next. And again, we'll start off by looking at the daily chart, just get a broader view. And at the end of December into January, we traded above and below the 200-day moving average that comes in at 120.13. In trading last week, we moved below that level, came down to the broken 38.2 of this move to the downside, found support buyers, moved back above the 200-day moving average on the employment report, closed above it, and continued that upside momentum yesterday, similar to what we saw in other currency pairs versus the US dollar. And today we're seeing a little corrective move to the downside. We'll be watching the 200-day moving average at 120.13. We're currently 110 pips away from that level, but we're sort of on the daily chart. We're in between the 50% retracement and the 200-day moving average, so sort of in a period of area of limbo here for this pair, because it's a fairly wide trading range here, but we sit in the middle of that trading range. So that's, markets are deciding which way it wants to go. But staying above the 200-day moving average is the last thing that we did. I need to stay above that level and get above the 50% retracement in order to push this pair to the upside. Let's take a look at the hourly chart. And if we look at the hourly chart, we did move below. We are trying to move below, I guess, this low that we saw in a corrective low that we saw in trading yesterday. We did find some support buyers against that level near the 121.11 level. Watch that level. It also roughly corresponds with this high and this high right here. So I think it's worthy of our attention. Maybe this area between the 121.11 and 121.26 will be a barometer for buyers and sellers. Also the 50% retracement, 121.43. As you can see, we fell below that level, and we are staying below that level here. So if we get above that level, that would give a little bit more of a push to the upside for this currency pair. Finally, I want to take a look at the dollar versus Canada. And this currency pair fell on Friday sharply as a result of stronger Canadian jobs reports, along with the Goldilocks U.S. report sent the dollar lower and the Canadian dollar higher. That continued in trading yesterday, but we did rebound. Again, this is a 4-hour chart here, and we are back above this swing area through here where we had a number of different swing lows and highs, and also the 61.8% retracement of the move down up, I guess, from this low right here to this high right here. 61.8 comes in at 134.02. These are all the swing lows area in this yellow area right through here. So we traded above and below that area, trying to hold resistance against it. And as you can see, we are trying to break above it. We're currently trading 134.14. 134.02 is a 61.8% retracement. Watch that level on the downside for support if this pair is going higher. My name is Michalowski. Good fortune with your trading. Bye-bye now.